Hi everyone, welcome to today's video. So if you take a look at this tweet, this is done by Donald Trump. He recently said that, hey, Modi is a very good friend and good things are happening between India and the US. It's a very good strategic partner, etc. Good points. Then Shri Narendra Modi, our Prime Minister, he picked up that tweet and retweeted it, adding his own commentary. And this is what the commentary says, that US is a very important partner and we would love to continue our trade with them. So if you analyze both these tweets, it kind of projects the sense that India-US tariff/trade war is likely to end. And by the time this video is released, I'm making this video on Saturday when these tweets were done. And by the time I release this video, the trade war might have already ended. Okay. So now what is going to be the impact of this trade war end? Should you go and jump and buy stocks? What type of sector segments you should look? What impact it is going to have on India-US stock market? So I'm going to speak from an investing lens. Okay. So I'll condense this entire summary. So in case you're looking to make fresh investments, then this commentary might be useful for you. So let's begin. And before I talk about like sectoral impact, just one very quick point, because many of you would think that, okay, all this like, Twitter is happening. So why are you taking it so seriously? Because we live in Twitter diplomacy world. US foreign policy is being shaped through Twitter commentary. India's foreign policy is being shaped through Twitter commentary. So we have to take these tweets very seriously, right? So I hope that we are on that same page. Now let's begin. And the first key point that you need to understand is that if you look at the experts' estimate, then due to this trade war, India was losing a lot of ground. Approximately 0.8% of our GDP would be hit if that trade war escalated, right? Or in the current version of the trade war. So in case this trade war goes away, because this is roughly like 40-day-old trade war as of now. Now, if the trade war goes away, then the impact of that roughly 0.8% is going to be very limited, right? So this is point one, that this is a net benefit to India if the trade war ends pretty soon. Now, yeah, so I don't know if this trade war will 100% end, but it looks like that it will end. So this is the first key point that you must know. Second, we need to take a look at market view, that okay, if we study the Indian market, then what is the situation, that how much gain can we potentially expect? So for this, we go and study Nifty, and here is Nifty chart. And I'm looking at a weekly candle, right? And I'm studying fairly long-term pattern, right? So this started post 2021. And since then we have been in this range, right? We have been trading around this range. And right now we are somewhere here. So we are at this lower end of this trading channel. And if this entire thing gets captured, so this entire block, then we are looking at a 14% gain on Nifty 50. Now there are 2-3 important points. Number one important point is that if you take a look at Nifty 50, this comprises of large cap Indian companies. If you consider something like mid cap 150 or small cap 150, right? These comprises of smaller market cap companies. And again, if you go and study valuations, the one key central point that you will understand is that Nifty 50 or large cap companies right now are undervalued, except for maybe like finance, which has run up a little bit. Most of the other sectors, be it pharma, IT, it hasn't really run up too much. There are some speculative sector, for example, defense, which I had already made a video on earlier, where I categorically mentioned that it is likely to witness deep correction, and that's already happening. So leave aside these speculative sectors, majority of large cap companies are kind of struggling. So therefore, Nifty 50 becomes a very good swing play. Now, this is not a recommendation that you go and buy Nifty 50 or not buy Nifty 50, your call, whatever you want to do. But honestly, this 14% gain looks like that it will be captured. Now, second key data point, and I would like you to take a look at this chart. Now, what this indicates is, it indicates India's income and spending patterns, okay? So this red line is the consumer spending, and I'm analyzing the trend from 2020 to 2025. And this blue line indicates, this line indicates the total disposable income. Now, in 2020, what happened, 2020, 2021, that a lot of money printing had happened, right? So for example, US's balance sheet expanded quite a lot. They printed a lot of US dollar. Some of that US dollar would have flowed across the world, even to India. So as a result, the disposable income or the total disposable income in the economy grew, right? So you can see this very clearly that this graph is inching upwards, right? So this is the trend. However, this red line, you will see that it has flatlined. In fact, it has come down slightly here, right? From 2024 to 2025. So if you aggregate fact 1 and fact 2, fact 1 being that total money printing was up, consumer discretionary income had increased, but consumer discretionary spending had not increased. This was primarily because of tax. that in India, we witnessed like fairly high increase in taxes from 2020 all the way till 2025. And in 2025, two major things have been done. One is that below 12 lakh rebates have been given in terms of personal income tax, and then GST rationalization has been done. So hopefully this will pick up, right? So if I align it to the previous Nifty 50 chart that I was showing you, that there is fundamental reason why Nifty 50 can go up by 14%. There is a technical reason why Nifty 50 can go up by 14%, right? So that's the market view. If the trade war ends, that it can act as a pivot point, right? Or making this news as the base, the markets might run up, right? So this is point one. What about the US market? Can it really run up, right? So let's look at US market also, and let me look at NASDAQ, because that is where majority of Indian investors end up spending money. So take a look at this. So NASDAQ is almost hitting all-time high, right? So it's not as if that, there is like room for growth per se, right, on this. But having said this, what you need to understand is that if we do a pure PE comparison, right, just PE ratio analysis of Indian market and US market, right? So Indian market and US market. Then from a PE wise, estimates tell us that Indian market is slightly more overvalued. Now, why is that the case? The reason is that Indian market typically is more expensive, right? And its valuation is generally given higher because the expectation is that India's economy will grow really, really fast compared to the US economy. Now, what is the meaning of economy growing really fast? Well, in stock market terms, it means earnings growing really fast, right? So long story short, right, just by looking at the American market, that hey, it is about to hit like all-time high, or it is almost close to all-time high, and Indian market is not an all-time high, there is like a 14% discount or whatever, you can't make that judgment and call that okay, US market is overvalued, because a couple of things are happening. One is that the estimates are that earnings improvement will happen in the US market for companies. This is what every or almost majority of the projections are telling us right now. And this primarily comes for like QQQ oriented companies, okay? Because in the US, tech is a very strong segment, okay? So this is, you can't just simply go out and say that, okay, US market is overvalued right now. Indian market, because historically it has been expensive, then it corrected quite a lot. And fundamentally now it can improve. So again, you can't really say that, okay, it is like, hyper overvalued, because there are reasons for it to go up. So, okay, so just quickly summarizing, because some people get confused. See, you can expect this market to do consistent compounding, okay? Consistent compounding means that, okay, this market will keep on going up by 15% CAGR, okay? In US dollar terms. Why? Because for the last 20 years, it has been doing it, okay? And here earnings improvement is very, very critical. The data shows us that 2026, 2027, 2028 are going to be data center years for the US market. So this is where US is going to go out and build a lot of data center and energy oriented companies. In India, the investment climate right now is not very clear, but due to clarity on trade war, it can act as a base and it can grow. So I feel that both the markets are fine. It's not as if that there is any problem now per se. You just need to, this is not a discounted market. Neither of the markets are discounted. India is a better swing play right now, right? For that capturing that 13-14% gain if you want to invest a little bit. US, if you are investing for the next 3-5 years, it's a great market. So I hope that this summary is clear, okay? Now, let's go segment wise, right, and sector wise, and let's look at the fact that, okay, what ends up happening in case there is an end to the trade war. Okay, so here is a quick chart that if you take a look at India's export to the US. So India exports a lot of textile apparel, gems and jewelry, seafood, fisheries, leather handicrafts, chemicals, agri, tech IT service, oil and gas, aerospace equipment. So these are like 4 or 5 key things or 4 or 5 key segments where India US trade kind of centers, okay? This is not just export, this is also import, okay? So these are major segments in which India and US are interacting with each other, right? So number one, right? If we take a look at textiles and apparels, now here it is estimated that this will be a positive thing for India, right? So I'm just writing positive for India. This again is going to be positive for India, gems and jewelry, right? So some stocks here can rally. This is a slow growth segment, so I will not touch it, right? This again is a slow growth segment because the margins are very thin. So again, no point touching this too much. Chemicals, auto parts. Now what is happening is that US is trying to bring a lot of US based manufacturers and sell their product into India. For example, Tesla showroom. You would have seen that sitting chief ministers are going and inaugurating Tesla showrooms in various states. Now, what does that indicate? That maybe like, Indian auto sector might be up for disruption. There can be a lot of competitive pressure that will get built. So this is net positive for the US, right? Agriculture, this again will be a net positive for the US defense equipment. So again, if you're holding defense sector stocks, again, this is something that you need to look closely. Now, tech IT is the final segment where India can benefit a lot more. And this is an area which kind of like I have been investing more money. I've already revealed it on my channel. I felt that a bottom has been made on IT stocks. Now, in case the India-US trade war ends, then IT stocks can really rally, right? So these are some of the prominent sectors that you need to study. And in case you're holding too much of defense stocks or agriculture stocks, then you need to be a little bit careful. Some undervalued sectors, for example, IT, might benefit a lot if India-US trade war kind of ends, and Indian IT stocks could rally. So this is a segmental level viewpoint. So a natural question comes that, okay, from a policy point of view, we have seen like, Modi spending a lot of time with Putin and Chinese premier, etc. So how do you think foreign policy is going to impact? Will India even allow US to access, for example, the India agriculture market? What is the probability of that happening? Or will they let like American automakers sell stuff in India? So from a policy viewpoint, fine, these sectors can grow, but will India really allow it? So, okay, so a couple of points there. So here you need to go into the details of the trade war dispute, right? And what is it that America was pushing India to do, and to what extent India can budge. So I'll give you very quick clarity, and this chart can really help, right? So for example, if you take a look at US energy and defense imports, India has already agreed, right, up until now, agreed to purchase $25 billion of US energy. So this is important to note. Second, India has already agreed to eliminate tariffs of around 40% on US industrial exports to India, right? This India has already agreed. Gradual opening of consumer markets. Now this has to do with US automobiles, alcoholic beverages. So these two become segments that can get deeply competitive in India, because one of the ways in which businesses have been designed in India, they enjoy a lot of local protection. The moment you open it to Chinese exporters or US based exporters, so yeah, that might not be very good, right? So you need to be a little bit careful with these two industries. Exemptions for US strategic imports. Now this is actually good for India, right? I mean, for example, if they export semiconductors to India, then India can pick up that semiconductor stack, build something on it. Now something similar is happening in UAE, that UAE imports US tech stack including semiconductors and build its next layer of data centers, वगैरह चीजें. So this is actually positive for both countries, right? I mean, the first three we can argue these things that okay, this is net positive for the US, but this fourth thing is very important for India, plus the IT, right? Because the IT growth will happen domestically also then, right? So this is important. Now this fourth point, I don't know what it means, that agreed to incremental reforms in market access for US firms in non-sensitive sectors. Now this is up for debate. This is very broad, so no point getting into this. But so far indications are coming that auto, alcohol, semiconductor, IT, defense, these are some of the prominent sectors that are likely to face a lot of volatility in the coming days, both from a positive or negative side. Okay, so as the next piece of analysis, I'll help you understand that if these changes are made at a policy level, then who benefits more? Because for example, if let's say IT is opened up, right, or semiconductor exports from US are done to India, who benefits more from such a move? So let's look at it at an industry level, and this chart can help with this. For example, if you take a look at US consumer goods, जैसे automobile हो गए, या if you take a look at alcohol, then definitely US exporters benefit. So if you are holding stocks like Radico Khaitan, or if you are holding defense oriented stocks, if you are holding Indian car manufacturing companies, then yes, be a little bit careful. Second is that if you take a look at defense, India anyways imports a lot of stuff from US, right? US sells India a lot of defense goods. Recently, there was a very bullish sentiment in the defense sector. A lot of mutual funds were launched in this segment, thematic mutual funds. But with US kind of pumping its muscle, this definitely benefits US unequivocally, right? So this is there. If you look at finance, e-commerce, medical devices, agriculture, now I don't know whether this will happen or not. I'll show you the next chart, right? But this again benefits like US companies. If further hardball negotiations happen, and if India is made to limit Russian oil imports, then US oil companies are going to export more energy to India. Now, this is unlikely to happen according to me, right? But this, I'm just presenting the entire holistic analysis. Now, more IP and digital regulation. So, US tech and pharma companies are going to benefit. So, they might twist Indian pharma arm. So, pharma also looks a little bit volatile as of now. I don't know if it kind of makes sense. There is too much uncertainty right now. So I would rather wait for clarity on pharma, how it's going to behave, and then subsequently add. But right now I'm not touching pharma. Now as a final piece, right, this is what I'll share with you, right? And this data is again very important because it will give you a sense as to how this final trade war deal might be concluded. So which sectors might get hit, might not get hit. Okay. So for example, if you consider US good, for example, alcohol, automobiles, etc., then the probability of India bending here is high or no? The answer is yes. There is a very high probability that auto sector in India will get hit a lot, right? So this is one. The second key sector is energy and defense. So here again, the chances are that US will be able to negotiate a trade deal which will favor them, right? So again, if you're holding defense stocks, you need to be careful. Number three, that if you're looking at slightly more politically sensitive markets in India, just a dairy, agriculture, now is that going to happen? Probability is low, or even if India allows some discounts right now, it might pull it back after 3-4 months. That probability is very, very high. There is a reason why, right? That access to market hasn't been given to American companies yet, and it is unlikely to change. Same with India-Russia import, because India is unlikely to destroy its relationship with Russia just to please America at this point. So again, I don't think American oil companies are going to benefit from India that much. Then comes the final point. For example, many US pharma companies, healthcare companies, they are pushing IP regulations in India and asking them that whatever patents we have, you need to protect them in India also. Now there the probability is that this might actually work out. Right now, the chances are medium, right? We can't really say yes and no to it. So therefore I was saying that it kind of makes sense to wait and watch that what exactly is happening in the pharma space. And once clarity is there, then only you jump in as an investor. So, okay, so quickly summarizing the video, that it's a good thing that India-US trade war, if it ends, it benefits both parties. It benefits India immediately, right? So because almost 0.8% of our GDP was kind of dependent on America, so that kind of helps us a lot. So definitely markets will react positively to that news. Number three, if we are looking to make long-term investments, then we need to pick good quality companies where there is certainty of investment. So right now, NASDAQ is very good from a long-term investing perspective. There is nothing wrong. Yes, short-term volatility might be there, or it might not go up because of India solving its issues with US. No, so it will not go up because of that, because US depends very little on India. So no major flip will happen on the US market, but India market will definitely gain in the short term, right? So this is point 3. Point 4, be very clear about which sectors are going to get negatively hit when this US-India trade war gets solved. So according to me, these would be companies like auto. So be a little bit careful there, right? Number 2, defense companies, alcohol companies, industrial goods companies. So all these companies will get hit. Even pharma, right? I mean, if I have to take a bet, even pharma, right, due to IP regulation laws, there can be a hit, right? So be very, very careful about these companies. Some clear winners might be IT, right? Which I have been bullish on for the last few months. I have already built a lot of positions on IT. So with that happening, that might actually benefit India. Semiconductors, data center companies in India will benefit, and especially large cap players in these segments might benefit, right? So this is the summary of the video. I hope you enjoyed this. If you did, do press the like button, subscribe, and I'll see you soon.